Zurich Insurance has overcome a record year for natural disaster claims in the industry to deliver its first dividend increase since 2011. Switzerland's biggest insurer raised its dividend for 2017 by 6% to 18 Swiss francs a share after signalling tighter or higher investor payouts back in November. Let's bring in the CEO of Zurich Insurance then, Mario Greco, who I'm very pleased to say joins us now. Mario, great to have you on the programme. Give us your rationale then for increasing dividends and the share buyback, crucially. What's the rationale behind the buyback this morning?
Good morning, Anna. Good morning, everybody. We decided on the dividend based on two considerations. We found 2017 an extremely strong year for us. Profits grew, and they grew steadily in all the aspects of our business. But more importantly, we look at 2018, 2019, and what we represented to the board yesterday was that we're very confident that the business growth and the business improvement will continue for us in 18 and 19. And this is what moved us to propose to the board the increase in the dividend, and this is what the board accepted and got convinced, and the confidence again on the future is probably the most important element of that.
Yes, so you must be very confident. What is it that gives you the confidence?
Well, the business is developing and growing on all different aspects. I mean, the premiums are growing back again in property and casualty. We have a very nice and strong growth in life. Farmers has been developing again the premium growth and is improving on customers. And the profitability is coming up as we expected, and it's quite strong, the profitability improvement. Costs are coming down. We committed to 1.5 billion cost reductions, and we achieved already half of it by the end of 2017.
So that's on the cost side, and on the pricing side, that sounds promising. In terms of this dividend, then, is 18, is that the new floor for the dividend? How high can this be pushed then, Mario, given the positive backdrop that you've just painted?
Yes, it is. When we announced our dividend policy back at in November 2016, we said that we considered the dividend a floor that, in case we would raise it, the new dividend will become the new floor. So it was 17 before, now it is 18, and we're confident that we will be able over time to move it further.
And given the positives that you've pointed out on costs and on pricing, Mario, the combined ratio still above 100. What is the explanation there, and how quickly does that get better?
The combined ratio is above 100, especially because of the impact of the Nat Cat events in the United States in a period of 3 weeks. Without that, the combined ratio is flattish, around 98, and we're confident that the combined ratio will come down in 18 and in 19, as we promise and as we expect that to do. What we see is an improvement of 1 percentage point in the loss ratio of 2017 business, and that is very promising for us going forward.
Are you quite surprised, Mario, that you're able to deliver such an upbeat outlook, a dividend and a share buyback in a year that has been so tough for the insurance sector because of the natural disasters, the wildfires, the hurricanes, the earthquakes? Does that surprise you? I'm
not surprised. We've been working hard through the year to achieve that, and there is a lot of work behind these numbers. So I'm very pleased. I'm not surprised, but I'm very pleased. This is what we wanted. We've been striving hard through the year to achieve it, and I think it's a great testament to the work done by the colleagues, by everybody, that we are able today to report on these numbers.
You started a restructuring plan back in 2015, Mario. How far through that are you? What lies ahead?
We want to be reliable, and so we are progressing steadily on every target that we announced. Of course, our ambition is to exceed the targets, not just to deliver on the targets. But I think at the end of 2017, investors, shareholders can see that we are focused, we're disciplined in just doing what we promised to do. How fast are we going? I think we're going pretty fast. Honestly, when we started at the end of 2016, we would think of getting where we are today, but we were not sure. And so we're very pleased to see that we're progressing fast and well in our plans.
Is there more to do on the job side? Will there be more jobs to go at Zurich?
No, actually, I mean, it's not about job losses and job cuts. It's about a profound transformation of the business that we are busy doing. Insurance is in a complete revolution, and the revolution is customer-led, and it's about the expectation, the needs of the customers. This has an impact on what we do, on the services we provide, on the skills we need to have, and we are really engaged with that in providing these services with the customers with the best possible skills. It's a huge transformation of who we are, how we work, and how we serve the customers.
Yeah, we've seen a lot of insurance companies investing in technology. Mario, you've been investing in Brightbox, of course, the Hong Kong telematics business. How quickly does this reshape how you deal with customers? How quickly is this digital technology revolution changing your relationships with your customers?
Oh, it is going very, very fast, and it's progressing every day, and it's moving really the borders of this industry forward, which is exciting, and it's a great time to be in. Also, let me remind that we also acquired Covermore, which is not an insurance company, and it's just about providing travel and services support to customers around the world. And again, that's not an insurance business, but it's a very important component of our relationship with the customers. That, together with Brightbox, together with the latest acquisitions we made on data analytics, start moving us into a different space of relationship with the customers. And we saw the impact of this because we saw customer retention going up, we saw customer loyalty moving positively, and customer satisfaction also improving.
Now, I know that climate change is a big theme for your business, Mario. I know that just like Bloomberg, you've got yourselves a highly energy-efficient new headquarters as well. But in terms of the business, we recently heard from AXA that they were prepared to phase out insurance coverage for new coal construction projects and oil sands. To what extent are you phasing out coverage for parts of the global economy that you don't like because of their impact on the climate?
We are extremely active on making our contribution to sustainability of this world. One thing where we've been investing strongly over the past year is about flood resilience. Flood is a big issue for not just the insurance industry, but for the world. And flood is creating every year many more damages than the other natural catastrophes. Since years ago, Zurich has been leading investment development in different places of the world to protect against the consequences of flood insurance. And I'm very proud of what we're doing in regions where maybe we don't even have any insurance presence. We're helping citizens, population, cities to be and to get better prepared. And then, of course, we're also very active on investing only in companies which are sustainable. And we've been also taking measures on coals and industries which are polluting. But what we're doing on flood is really outstanding.